Conchada, and in this video, I'll be discussing off-balance sheet risk. So, first, what is off-balance sheet risk? From its definition, off-balance sheet risk is the risk incurred by an FI or financial institution as the result of activities related to contingent asset and liabilities. So, yun nga daw po. Ito daw po yung risk na natamo ng financial institution at ang resulta ng activities ay nakabatay po sa asset at sa liabilities. So, yun po. Now, let's move on to striking growth of off-balance sheet risk activities. So, one of the most striking trends daw po involving modern financial institution has been the growth in their off-balance sheet or OBS activities, and thus their off-balance sheet risk. While all financial institution to some extent is engaged off-balance sheet activities, and most attention has been drawn to the activities sa mga bangko, especially sa malalaking bangko. By contrast, off-balance sheet activities daw po have been less of a concern to a smaller depository institution and many insurers. Tapos, yung off-balance sheet daw po sa activity, in definition na off-balance sheet, hindi daw po sila nag-a-appear sa financial institution current balance sheet. Kasi hindi daw po ito involved sa paghawak ng current primary claim, yung asset, o sa secondary claim naman, yung liabilities. Instead, off-balance sheet activities affect the future shape of an financial institution balance sheet, since kasi ito daw po ay involved sa asset at liability dahil dito ito nakabatay, and it give rise to their potential placement in the future on the balance sheet. Tapos yung accountant naman daw po ang naglalagay sa kanila below the bottom line sa financial institution balance sheet. Ang magandang halimbawa daw po is yung sa off-balance sheet activities is yung the issuance of standby letter of credit guarantee by insurance companies and banks to back the issuance of municipal bonds. Karamihan daw po, many state and local governments, hindi sila nag-i-issue ng securities kung walang banks on insurance company. Tapos, ang letter of credit guarantees daw po ay nangako ng pagbabayad sa supplier. So, should the buying organization default on its obligation in the future application. So, katulad po ng mga corporate bond, hindi sila nag-i-issue kung walang without such guarantees. Nothing appears on the FI balance sheet. So, wala nga daw po nag-a-appear sa financial institution balance sheet ngayon, today. Or, kahit sa hinaharap in the future. In this case of balance sheet activities. However, the fee earned for issuing the letter of credit guarantee appears on financial institution income statement. And as the result po, the ability to earn fee income while not loading up or expanding the balance sheet has become an important motivation for financial institution to pursue off-balance sheet business. Unfortunately, itong activities na ito ay hindi risk-free. That's the corporate bonds issue at default on its of interest. The principal payments and ito nga ay nakabatay sa liability or guarantee. The financial institution issued becomes an actual reliability that FS on the FI balance sheet. Thank you very much. That's all for discussion about off-balance sheet risk.
Good day everyone, I am Mary Richelle Freires and my topic for today is about foreign exchange risk. But before that, I want to recall the terms related to my main topic. Okay, so let's start. First, what is Forex or foreign exchange? Ito ay proseso ng pakikipagpalitan ng pera ng isang bansa patungo sa ibang bansa. And then, what is forex market? Dito naman nagaganap ang pagpapalitan ng pera ng iba't ibang bansa nakasali sa pagtitrade. And then, what is forex rate? Ito yung price or halaga ng isang currency in exchange to other currencies sa ibang bansa. Another one is forex investment. Kapag ang isang company or individual sa isang bansa ay nag-invest or mag-i-invest pa lang ng assets or stock sa company ng ibang bansa. And then, meron dalawang uri ng investment. Ang una is foreign direct investment or FDI. Kapag ang company or individual ay nagkaroon ng physical investment or for example, si company dito sa Pilipinas ay bumili ng building or ng machines or other equipment sa ibang bansa. In contrast naman ito sa next kind of investment which is indirect investment or foreign portfolio investment. Dito naman, kapag ang company sa financial institution ay bumili ng positions or stakes sa ibang bansa, pumapasok dito yung mga securities and other financial assets like, for example, stocks, bonds, mutual funds, exchange-traded funds, ADRs or American Deposit Receipts and GDRs or Global Deposit Receipts. And then, punta na tayo sa ating main topic which is Forex risk or foreign exchange risk. It is the risk na kung saan ang exchange rate ay nagbabago-bago na maaaring may epekto sa value ng financial assets and liabilities denominated in foreign currencies. Foreign exchange risk can occur either directly as the result of trading in foreign currencies and making foreign currency loans, buying foreign issued securities or issuing a foreign currency denominated debt. And then the next question is, what is the difference between forex risk and forex exposure? Una, ang forex risk ay related sa pagbabago-bago sa halaga ng domestic currency ng assets, liabilities, or operating income sa hindi inaasahan o bigla ang pagbabago ng exchange risk. Dito yun kung saan yung forex exposure is at risk. Pangalawa, Ang exposure kasi ay related sa total value ng assets, liabilities, or even cash flows of an enterprise denominated in foreign currency. While yung risk is the excess or shortfall ng cash flow or halaga ng assets or liabilities na malamang na manggaling o nanggaling sa account ng exchange rate fluctuations. And then, meron ditong types of forex risk. There are three types of forex risk. First is the transaction risk. Ito ay tumutukoy or kaugnay ito sa pag-i-import at pag-i-export ng goods. Kapag ang company ay nag-export ng goods on credit, may inaasahan siyang bayad mula sa company ng ibang bansa. Nakadepende naman ito sa dami ng marireceive ng foreign exchange movement mula sa transaction date hanggang sa settlement date. Second is the translation risk. Ang financial statement ng overseas subsidiaries ay kadalasang tinatranslate or kino-convert. For example, financial statement subsidiaries ng McDo sa ibang bansa, pagkatapos ay itatranslate or i-convert yung financial statements nito dito sa Pilipinas. Depende sa exchange rate ng assets, liabilities, allocations, and other sections of financial accounting. And then the last one is the economic risk. It is the long-term effects of exchange rate changes in the present value of future cash flows. And then, according to my research, forex risk management is crucial and also important to any enterprises that doing international businesses. The values of major currencies constantly fluctuate against each other, creating income uncertainty to the businesses. And another definition of forex risk management is it enables you to implement a set of rules and measures to ensure any negative impact of a forex rate. The question is how to manage the forex risk. First, understand the forex market. Unang-una yan. Siyempre, kailangan malaman mo kung ano yung mga terms. Like, for example, ano ba yung AUD, USD, something like that. And then, get a grasp on leverage or understand leverage. And then, build a good trading plan. It is important to have a plan. Then, set a risk-reward ratio. Use stops and limits. Meron nga tayong sinasabi na dapat alam mo kung kailan kahihinto or kung hanggang saan lang yung pwede. Ganun din sa pagte-trade. So dapat hindi yung dire-diretso ka lang. So kailangan alam mo kung kailan kahihinto, and then alam mo kung hanggang saan lang yun. And then manage your emotions. Sa pagte-trade kasi, once na nagkaroon tayo ng malaking profit, matutuwa na tayo na mag-trade hanggang sa hindi natin namamalayan na meron na pala itong, or nalilimutan natin na meron itong consequences. So be careful and control your emotions. And then keep an eye on news and events. Mahalaga na updated tayo kasi kung halimbawa trader tayo, dapat alam natin kung anong nangyayari sa hindi lang sa industry kundi sa buong environment. Kasi lahat yun is nakaka-affect or ang result nun is sa industry pa rin yung maaapektuhan. And then start with a demo account. So okay. And then in conclusion or sa madaling sabi, nagkakaroon ng forex risk kapag nag-invest or nag-purchase ka or tayo ng tangible or intangible assets or liabilities or even or liabilities sa ibang bansa, not knowing the fluctuations of exchange rate. For example, nag-trade tayo sa US. Hindi natin alam na pabago-bago yung fluctuations, kumbaga parang bumaba. So parang unpredictable kasi ang forex forex risk. So hindi natin alam kung magiging maganda ba yung future trading natin or hindi. So yun lang, I hope na meron kayong natutunan, and thank you.
Good morning, ma'am. Good morning, classmates. My name is Larjin LJC Grapani, and my motto is people create her own destiny. Naniniwala naman po talaga ako dun kasi mahirap naman po talaga iasa na lang sa ibang tao o sa tadhana yung mga gusto mong mangyari sa buhay mo. Kagaya po ng kapag gusto mo po makapagtapos, iaasa nyo na lang po ba yun sa ibang tao? Syempre po, ikaw po mismo ang gagawa nun. And my topic for today po is country or a sovereign risk. This one of the risk of financial institution. The sovereign risk or a country risk is the risk that the government could default on its debt. Ito po yung inutang po ng isang bansa na hindi na po natin mabayaran, or another obligation. It also the risk generally associated with investing in a particular country or providing fund to its government. Ito din po yung pagbibigay natin o yung pangpapautang natin, hindi po pala pagbibigay, yung pagpapautang po natin dun po sa isang bansa. Yun nga po yung possible na hindi na tayo mabayaran ng isang bansa kasi po may mga rason po siguro. For example po is nangutang po tayo nung January sa Amerika at sinabi po natin babayaran po natin siya ng March, which is alam naman po natin na nung March po ay nagkaroon na po ng tinatawag nating pandemya na hindi naman po inaasahan ng lahat ng tao, lalo na po ang gobyerno, na kung saan po yung perang ipangbabayad po sana natin is nagamit po ng government para po ipangtulong, o yun po yung ginamit nilang pera para makatulong sa mga taong nawalan ng trabaho. At saan naman po tayo kukuha ng pambayad ng pondo para po makapagbayad? Syempre po wala, kasi marami nga pong nawalan ng trabaho, which is wala na pong nakapagbayad ng tax nila dahil po wala naman po silang trabaho. Ganun din po yung mga companies na or the manufacturer na hindi naman po makapagbayad ng buwis dahil po nag-close po sila dahil din po sa pandemya. At this is the risk that repayments by foreign borrowers may be interrupted because of interference from foreign governments or other political entities. At isa pa po is ito nga po yung sinasabi na yung peligro po ng pagbabayad ng ating utang sa ibang bansa. Yun nga po is hindi po natin sila mabayaran dahil din po dun sa sinasabi nila na yung mga political entities po na humahawak din po sa loob ng isang ekonomiya. And this is the risk that reflects how the government policies can affect the financial systems or financial institution of a country, na kapag nga po tayo naglabas ng pera, magkakaroon po ng pag naglabas po tayo ng pera at hindi na po ulit pumasok sa atin, magkakaroon po tayo ng shortage sa financial institution ng isang ekonomiya po. Syempre po, naglabas po tayo, ibig sabihin po nun, ang iniisip po natin is magkakaroon po ng balik yun sa atin, which is hindi na nga po tayo nabayaran. At yun nga po yung risk ng ating country. And this refers to how the country's political landscape, including but not limited to the security and stability, as well as the economic policies, including tax regulations, affect financial institution and its activities. Nagkaroon nga po ng epek ito sa atin dahil nga po wala na nga yung pandemya nga po is kagaya po ng pandemya na wala na pong nakapagbayad ng mga tax, na nagkaroon ng malaking epekto sa pagdaloy ng pera ng ating ekonomiya or sa financial system ng ating ekonomiya. At Hindi naman po natin sinasabi na lahat ng bansa is ganun. Pero po, ang bansa naman po na kapag siguro po pinautang naman po natin is makakapagbayad naman po. Wag lang po talagang magkaroon ng problema kagaya po nung nangyari sa atin na pandemic po, which is lahat naman po ata ng bansa is nakaranas ng sinasabi po yung pandemic po na yun, which yung coronavirus po, na sa lahat naman po ng bansa yun is tumama. Lahat po ng bansa is naapektuhan ang financial institution nila, which is nagkaroon po sila ng short. At yun nga lang po, and to be short po, the country risk or the sovereign risk is the risk that one country to failing her loans or her debt to another country. And ang nakita ko pong country na nagkaroon po ng failing is the Argentina and Mexico noong 1970s po, na nagkaroon po ng big extent to pay her loan or her debt because of the oil shock. And na siguro po kapag nagkaroon ng mga ganun is nagkakaroon po ng financial shortage ang isang bansa, dahil nga po naglabas ang isang bansa ng pera na inaasahan po nila na babalik uli, pero hindi na nga po. Dahil po doon nakakaapekto po yun sa financial nila. At yun lamang po, at maraming salamat po.
So, good morning to all of you. I am Agnes P. Makasayat and I am here to discuss to you the risks incurred by financial institutions. First, we have technology risk and the operational risk. What is technology risk? Technology risk is the risk incurred by financial institution when its technological investment does not produce anticipated cost savings. So, ano daw ibig sabihin nun? Based from the definition itself, we invest in the technology in order for our institutions to get the benefits from investing. When we take the technological risk the moment we invest our money to that technology. And there is a possibility na mas mataas yung maging benefits na makukuha natin kaya nga tayo nag-invest. But there is also a consequences na yung investment cost may be higher than the benefits na makukuha natin. And kapag yun yung nangyari, it's our loss. Pero kapag naman mas mataas yung benefits, so opportunity natin yun para mas tumaas yung ating revenue. Then, the next example of that is when we are about to adopt a new system. So, mag-a-adapt tayo ng new system or the new technology. By adapting that, nag-take tayo ng risk ng sa technology. Bakit kailangan natin i-adapt yung bagong technology na hindi pa natry ng iba? Para kapag yung technology na yon is naging maganda yung effect sa ating institutions, maaari tayong maging more advanced kaysa dun sa ating competitors. While there is also a consequences na kapag hindi maganda yung naging resulta ng new technology, mag-lead siya ng loss sa ating institutions and negative yung magiging effect niya. So, the next one is the operational risk. What is operational risk? Operational risk is a risk that existing technology or support system may malfunction or break down. Operational risk. Operational risk, based from its definition, is, for example, yung computer natin na ginagamit sa day-to-day process or operations of our business is ayaw nang mabuhay. So, possible na mangyari yon. So, it may affect the operations of the business. So, operational risk arises from three sources. First, we have people. Second, process. And third, systems. So, how?
nag-a-arise ang operational risk sa tao kapag yung empleyado natin or yung tao sa financial institutions natin are encoding manipulated data. Kapag yung data na ipinapasok niya sa ating financial institutions are not reliable, it may affect the operations of the financial institution. So, kailangan ang mga tao sa ating financial institutions is tapat sa kanilang trabaho. Then, the second one is the process. We all know that financial institutions are using may mga papel na pinaprocess yan. And sometimes, hindi may iwasan yung magkamali. For example, nagpipill up yung kliyente. It may be in a side of the client or even our institutions itself. Pwedeng tayo yung magkamali sa pagre-record or pwede din naman yung kliyente mo mismo yung nagkamali sa pag-fill up ng form. And also, one example of that is si client nag-deposit ng pera dun sa institutions natin and mali yung amount na na-record natin dun sa kanilang account. And second example of that is pag sa client, yung client A is nag-deposit pero na-record ng institution sa client B. So, magkakaroon ng problema doon. Then the third one is the system. So, we all know that system is one of the important aspect in financial institutions. Kasi minsan dun nakabase yung day-to-day process ng business. So, kapag nagkaroon ng malfunction sa system, it is possible that we might lose the important data that our institutions need. Then, also, we move on with the 3 categories of operational risk. We have the fraud risk, legal risk, and physical and environmental risk. First, environmental and physical risk. Ito yung mga risk na dala ng mga sakuna. For example, bagyo. Pag may sunog, yun yung sinasabi nilang physical or environmental risk. And kaya minsan yung financial institutions is kumukuha sila ng insurance para if ever na magkaroon ng sakuna na ganun, is hindi naman ganun kalubog yung kanilang company. May pagkukuhanan sila ng funds para mabawi yung mga losses nila. Then, the second one is the legal risk. We all know that sometimes yung gobyerno natin is medyo pabago-bago yung batas. So, it is our responsibility to know the updated legal policy. So, we are not going to commit the illegal guidelines. So, for example, meron tayong policy na pinapatupad sa institutions natin na hindi sakto sa policy na pinapatupad ng ating bansa. And hindi naman natin alam na mali pala yun kasi nga hindi tayo updated sa mga pagbabago ng legal policies ng bansa natin. So, responsibilidad natin na maging updated doon. So, and also, legal risk was defined as a part of operational risk by the Basel II Accord 2003. Then, the last one is the fraud risk. Fraud risk are the risk of the projected and current financial conditions. So, saan yun nag-aaral siya kapag merong human errors or system malfunction and nagkaroon ng problema sa internal processes. So, yun lang po ang operational and technology risk.
So, good day. I am Anisel Kayla Apiana. I'm here to present insolvency risk. So, what is insolvency risk? Insolvency risk is a consequence of an outcome of one or more of the risks described above, like interest rate, market, credit, off-balance sheet, technological, foreign exchange, sovereign, and liquidity. Technically, insolvency occurs when the capital or equity resources of an FI's owners are driven to or near to zero due to losses incurred as the result of one or more of the risks described above. Consider the case of Washington Mutual, which incurred heavy losses from its on and off balance sheet holdings during the financial crisis. By early September 2008, WAMU's market capital was worth on only $3.5 billion, down from $43 billion at the end of 2006. In September 2008, the bank was taken over by the FDIC and sold to JP Morgan Chase. In contrast, in March 2009, Citigroup's stock price fell to below $1 per share, and the once largest bank in the United States was near failure. So providing that some banks are too big to fail, Citigroup received a substantial government guarantee against losses up to $306 billion and $20 billion injection of cash to prevent failure. Indeed, through June 2008, some 600 banks had received a total of $200 billion in federal government funds through the Capital Purchases Program, in an effort to prop up capital and support lending. In general, the more equity capital to borrowed funds an FI has, that is, the lower its leverage, the better able it is withstand losses due to risk exposure, such as adverse liquidity changes, unexpected credit losses, and so on. Thus, both the management and regulators of FIs focuses on an FI's capital and its adequacy as a key measure of its ability to remain solvent and grow in the face of multitude risk exposures. Chapter 13 discusses the issue of what is considered to be an adequate level of the capital of the management FI's overall risk exposure. So, insolvency risk is the risk that an FI may not enough capital to offset a sudden decline in the value of its asset relative to its liabilities. So when insolvency risk occurs, it occurs when a debtor can't make payment because he doesn't have the money. And how insolvency risk is related to credit risk and liquidity risk. Liquidity risk and credit risk lead to insolvency. The credit repayment capacity to the borrower repay the debt on maturity is the liquidity risk, meaning when there is a crisis for liquid funds and credit risk, therefore, both liquidity risk and credit risk cause insolvency. Thank you.